Hello, everyone. Welcome to another live analysis. It was supposed to be NFP, as you might already know, but it won't be since the US government is still in a shutdown. And even though we were really expecting and like to see the NFP release, like we did last week with some US data, unfortunately, the government decided not to release the NFP. So unfortunately, we don't have the jobs release today. So let's wait and see whether it will for when it will be postponed. So yeah, the shutdown is making everyone really cautious, really stressful. The uncertainty also of when it will actually end, and also the fear that we are nowhere near an agreement, so there no progress has been made, is something that unfortunately has causes a lot of up and downs in the market. So we have seen a really sudden, turbulent US equity market so far today. And I'm going to show you right now what I mean. So yeah, this session, since the NFP is not, it won't be released today. It's all about how the markets perform so far today. We're going to do some technical analysis. Feel free to add the asset that you wish to analyze. So I will be here to reply to any questions, to analyze any asset that you want me to analyze. So in the meantime, I'm going to share. No, Elvis, it won't be an NFP. It has been removed from the calendar. I don't know yet when it will be actually released. So no one knows actually, with certainty at least. No one knows with certainty when they're gonna release it. You remember that we have already missed one NFP, so now it's two NFPs pending. As long as the shutdown is not really ending, we don't know. So we just wait and see. So yeah, there won't be an NFP, unfortunately. I have checked again and again the calendar. I tried to find in the US government like at least when it will when they will actually release it. I couldn't find anything, so let's wait and see. It was already removed from the calendar early this morning, so yeah. Nonetheless, we move on. We're gonna scan the markets. We're gonna see the charts, scan the charts, and see whether there is anything interesting. See also the overall trends, the overall outlooks, the intraday ones as well. So feel free to ask, to stick on the comments if there is a particular asset that you want me to analyze. Okay. So in the meantime, let me share my screen as well. Perfect. Okay, this is euro dollar. But before we mention euro dollar, I'm gonna jump on the US equity market. That's Nasdaq, been on the downside yesterday and so far today. S&P 500, let's put the 1 hour chart, very similar performance as you can see. Actually, that was the sell of yesterday during the Asia session, consolidated for the remaining of the day, consolidated yesterday night as well. But the last 4 hours, as we move closer to the US Open, it's looking like in red. So the reason why I'm showing you guys, more people join, guys. Okay, I've seen that a lot of people just join. Just so I would like to update you basically, NFP will not be released. Another postponement. We don't know when it will be released. I checked everywhere. I checked the calendar. I tried to check in the US government. It won't be released today. So don't expect that for the NFP, but we don't really know when they will actually release it either. So we have two NFPs pending, the September's and October's. So as long we don't see any progress on shutdown, unfortunately, things could get a bit wild. All this uncertainty, all this in general, the uncertainty around the shutdown, and the lack of progress, the lack of an agreement, and the lack of a green light is making the markets really, really stressful. And I'm gonna do a video about it, but just have in mind that it's already the longest shutdown ever. But the key, guys, is to see whether we last until Thanksgiving. So it means another month. That would be very, very crucial, because it could, theoretically at least, cause a really wild decline for stock markets, for equity markets. Have this at the back of your head, and let's wait and see. We might not reach Thanksgiving Day, so let's wait and see. In the meantime, so no NFP today. We don't know when it will be released. So in the meantime, for today, let's do a bit of a briefing. So as I was saying, the stock markets today have seen a sudden turbulence. Okay, so it has to do more of a technical profit-taking conditions, a technical selling. Okay, anyways, Friday, but also the lack of NFP, the absence of NFP is something that put the market participants in a doubt, and that's why we have seen this the US indices, in general, the US equity market, in red so far today and yesterday as well. But the last 4 hours, it has been in red. So a lot of doubts around the shutdown. But it's not only the shutdown and the concerns around the shutdown situation, the shutdown uncertainty, but also there were a lot of concerns regarding AI. So some concerns have been raised regarding whether all this spending on AI, all these billions that they have been invested in AI, they will actually pay off. That's why these, along with the shutdown, along with in general a really lofty, let's say, stock valuation, is what it has sent S&P 500. This is S&P 500 down, Nasdaq down. So let me show you Nasdaq. We've seen it earlier. That's the daily chart, by the way. So we've been on the downside for the past nearly 2 weeks. Okay, so yeah, in general, disappointing second half of October, beginning of November. So yeah, the drop is a technical selling, as I said, especially today. If I focus on today's performance, okay. So here is Nasdaq. This is S&P 500. So it's more of a technical selling. So yeah, so let me just find the support area, just for you to be in line, guys. So I'm gonna jump into the daily chart. Okay, that used to be an old, sorry, annual support level, but okay. Connecting my lows, 1, 2, 3, 4, perfect. So the next support level is looking to be around 66.35. But let me use also, sorry for that. Give me a second just to use my moving averages as well. Let's have the 51. Yes, they're pretty close. Can you see that? Let's have 100 as well. Perfect. So does it satisfy my chart? Very decent. Very decent. Okay, let me try the exponentials as well then, just to see whether they're going to give me way better. Relatively okay. A bit more sensitive. So I'm going to use exponential ones instead. Perfect. And I'm going to add also the 20-day one. Just to see where we're standing right now. Okay. Okay, so below 20-day, that's the daily chart in S&P 500, below the daily, the 20-day exponential moving average. So you understand that the immediate support, it will be somewhere here between my trend line and the 50%, so the 50-day exponential moving average. So 66.70 to 66.35. That's the immediate support zone, guys. Okay, that's the immediate one. Obviously, a move below this territory could actually confirm further decline. Okay, because it would be the break of a trending line that has been well satisfied actually since August, since August. So this could open the doors to 6,500s, okay, 6,500s, which also coincides with the 100 exponential moving average, but also it used to be a nice resistance level at the on the whole, actually the whole August. So this was then this area, this resistance area, the 6,500s territory. It used to be resistance. However, it has actually turned into support in October. And if we see a break below 66, 40, 35, 40, then 6,500s is the next level in focus. Okay, have this in mind. So intraday now, you continue in red. I'm using Heikin-Ashi candles over here. Momentum is negative. Parabolic SAR turn negative. The price moves below all moving average. So basically, there is further room on the downside. I'm gonna just apply. That should be a much better one, actually. Yeah. Okay, I see. 66.90 is the next support level. And this late swing that we have seen. Okay. Don't really like that. Yeah, so it seems that there is some room further on the downside. You can see from stochastics as well that they have still space on the downside. Can you see stochastics? Yeah, over here. So MACD as well below zero. So there is a still some selling going on the background. So you see that there is some intraday selling still. So Yeah. So negative equity. Basically, the whole US equity market is in red. Is in red. I'm not sure whether Mr. Elon Musk's news have affected significantly the US indices. I don't know whether you heard it, but he's the very first person in the world that is officially a trillionaire. A trillionaire. So, yeah, nonetheless, guys, yeah, you need to stick on your technicals for a while. Because as long as we have a lack of government data, okay, so we have a shutdown, so we don't have any government data. The technical buying or technical selling, it will prevail. So the chart analysis, the technical analysis, has taken a more prominence due to the lack of government data. Yeah, so that's about stocks. Let me see your questions, by the way. Yeah, euro dollar, euro dollar, euro dollar, and you're absolutely right, because there is a jump. We have seen. Okay, here we are. Yeah, there was a nice decisive move higher, extending actually extending up to 115.65. So this is euro dollar. I'm gonna keep yeah, here's raw. Everyone, actually, okay, you don't need to add more comments, raw. I've seen it. Yes, okay, I need to do the analysis. That's why. Okay, analyze euro dollar. Yeah, I'm on it. This is euro dollar. Okay, this is euro dollar in a 30 minutes chart. So I'm gonna put a note, a caption. Euro dollar, euro dollar, euro dollar, euro dollar. So yeah, here we are. I'm gonna keep it like on the bottom. So NFP. No. Teku Suleiman. No, there won't be an NFP. It has been cancelled. So no NFP. Okay, no NFP. So euro dollar. Okay, I see that you're struggling. You couldn't follow my word. Okay, never mind. Okay, I'm gonna put at the bottom what I'm actually analyzing. Okay, so this is euro dollar in 30 minutes chart. We have seen a decisive move higher, right, for the past 1 to 3 hours in a row. It seems that this run out of steam basically was overbought. I have used here Japanese candlesticks, obviously, but two Bollinger Bands with different standard deviations. So I have used a 2 and a 3 standard deviation. You can see that it managed to extend in my overbought zone. So the gap between the two moving averages are my overbought zone. But currently, it reverted back in below the 20, my first, basically the 2 standard deviation Bollinger Band. Sorry. So it seems that it has reached overbought conditions and needs a bit of a correction. So now it's really important for us to identify whether the correction will be in the form of consolidation, sideways movement, or whether we're going to see actually a move back to the midline, into the average value of euro dollar. So I'm going to go upwards. I'm going to go to the daily chart just to find, guys, my immediate support and resistance levels, okay, and see a bit my technicals, the momentum, etc. Okay, so MACD. Where's my MACD? Here we go. Okay, perfect. Okay, MACD, it's on. Anyway, euro dollar has been on the downside, like since the whole October and November so far. So if I focus on the performance that we have seen, September, October, and so far, so nearly, more than 2 months. So I'm gonna, here you go, add a channel. Oh, okay, not an ideal. Let me fix it a bit. Okay, much better. Much better. So you can see that the euro dollar has been on the downside for the past 2 months. Okay, it's expected to continue this way. Momentum is negative. It's a clear downtrend, right? However, we have a very, very important, as you can see, which you can't see, sorry, support zone over here. Okay, this support zone is holding quite decisively early since June. Okay, so this is just, I'm doing analysis on a daily time frame because I want to start from the daily and go downwards to up to the 30 minutes chart. And I want to spot basically my support and resistance level. So that's a long-term support level. Now on the upside, the 20 period moving average, okay, and the ceiling, the top of my channel are useful as immediate resistance levels. So from resistance perspective, we are covered. Now, downwards for our chart. So I can see that it's is above the 20-day moving average. I had a really positive 4-hour session so far. MACD, however, is still below 0. So, okay, right now, the 4-hour chart is not really useful. It's not giving me anything new. 1-hour chart right now. Okay, so it's what we said earlier. Bounce, rally up to 1563, if I'm not mistaken. Yeah, so this now is your immediate resistance level. Okay. But currently, because it's overbought, it's turning lower. So I'm gonna connect. Can you see the tails of my last 3 hours, 3 sessions? Sorry, I'm in a 30 minutes chart, by the way. I'm gonna put a line, okay, because this is the immediate support level. It's a level that is holding for 3 consecutive sessions. A close, not a move, a close. So this candle, this 30 minutes candle, this one, actually I need to wait for another 6 minutes to see how it will close, whether it will close below 115.53.9 or whether it will actually stay above it. Because if it stayed above it, that means that we're going to see some consolidation before another move further on the upside. Okay, because momentum is still positive. If I put also my, where is it? Come on, stochastics. I would like stochastics for the 30-minute chart. Okay, overbought, bearish cross, but hasn't crossed below 80 yet. So it's not really confirming a pullback. Okay, so that's key. What I'm saying right now is key. So consolidation it is. So be patient for another 5 minutes to see how this candle will close. So let me see the comments. Sorry, I need to follow up with your comments. Gold, NFP, euro, dollar. I'm on euro dollar, analyze euro dollar. No NFP today, guys. Postpone. Yes, this is what I'm saying, Satomo. No NFP. It has been postponed once again. So we have two NFPs pending, the September's ones and October ones. And no one knows when they will actually release it, along with every single US data, unfortunately. So rely on your technicals, on what you see on the charts, rather than the fundamentals right now, because it seems that the lack of the shutdown it has triggered a lot of technicals rather than fundamentals. You get what I mean? Okay, so I need to cover gold as well and Bitcoin because you asked for it. Dollar yen as well. Okay. I'm gonna analyze everything. Don't worry about it, guys. Okay. Repos. No, guys. There won't be any NFP today. No NFP. No. They have postponed it once again. They won't release it. They will not release it. Okay. No NFP. So that's euro dollar. We have another 3 minutes until this candle close, so I'm gonna jump quickly into gold until euro dollar is like done. It's over. So okay, over here I have my Heiken Ashes. In general, gold faces a lot of uncertainty the past few days, a lot of consolidation. Sorry, where's my... So this is, okay, let me change the caption. Now we are analyzing gold. Here we go, gold. Perfect. Okay, my dear friends. Let's discuss about gold right now. As I was saying, it was a shutdown. It is a shutdown. It is the uncertainty, is the concern around AI spending, but also something I forgot to mention is that we have some Fed speech that affected the markets as well, and is why we have seen actually dollar weakening further. So we have seen Mr. Fed Vice Chair Jefferson saying that they should proceed slowly with further rate cuts. So the next Fed meeting is on the 10th of December. So we have a lot to see until then, obviously. But this comment was a bit hawkish, if you allow me. The fact that he said that they should proceed slowly with the cuts, it gives the impression that they could not proceed with any further rate cuts this year. Let's wait and see, but yeah, we have plenty of time until the 10th of December. We need to see what will happen with the shutdown as well. We need to see the impact from the shutdown into the economy. So yeah, currently the odds are for a 25 points rate cut for December. Okay, so that's why dollar has seen a lot of fluctuations today. So gold. Gold has obviously been affected as well today, but yeah. Okay, so Had to do also with the risk appetite. So yeah, as I was saying, okay, gold has been on the sideways for the past 2 weeks. I'm gonna zoom in, okay, into the 4-hour chart. Why? Because I feel I'm not quite sure, not really confident, but I'm gonna put some lines on. I feel like this is a really narrow triangle, but it could be useful. So I'm gonna put my lines on. This is gold 4-hour chart. Okay. We had a nice, beautiful FM formation, which end up bearish, as you can see. The asset dive to 38.85 level, and is consolidating since then between 3,900 and 4,000 4,050 40 50 450. So yeah, it has been sideways neutral since actually the whole week, since last week, Thursday, Wednesday, last week. So it's consolidating, but this looks like a nice triangle. So that will be useful. First, to identify a potential breakout above or below it, but also it has gave us already some nice support levels and resistance levels. So you see, we have another, so 1-hour chart now, right? We had lower swing high yesterday, and then another lower swing high today, indicating that we could see a pullback. Okay, so I'm gonna jump into the 30-minute chart. Down, 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 all moving averages. Okay, keep pointing lower. The next support is on the previous swing low at 39.85. MACD is neutral, but stochastic looks that there is some room on the downside still. Not a lot, but there is some limited move. Would really like, though, to see a crossing below 20, because it could be like, let me see, just, yeah, it could consolidate. So parabolics are negative, moving averages are negative. So next support is at 39.85 levels, guys. Okay, 39.85. So yeah, we have contradictory performances. What I mean, positive rally, I mean a rally for euro dollar, okay, but decline on gold. So it seems that there is a lot of confusion. So if I check the dollar index, where is the dollar index? Yeah, it's weak. Dollar, it is weak, but euro dollar is on the upside, and it has been on the upside the whole November so far. Okay, so it seems that euro could be the gainer of the week. Let me find Finvis just to see where we stand. Finvis. Guys, have you seen this? We are back to euro dollar. Sorry for that. Back to euro dollar. Let me put okay. This is back to euro dollar, just to show you that indeed the candle failed to extend below my support. It stayed. So this was a temporary limited consolidation before another jump to the upside. So a break of 115.64 could open the doors to 116 level, actually. The ceiling of the channel, remember? The ceiling of the channel, of the down channel that we have seen for the past 2 months, more than 2 months. If you need immediate support levels, use the Bollingers, if you like Bollingers. So here we go. Or previous swing highs, swing lows. So let me just, the previous top actually is where I placed it. Actually, that was the previous support level turned into resistance. And the very next one will be way higher, obviously, 116.65, but between them we have the round 116 level. So yes, stick on the 116 like I mentioned earlier. So yeah, euro dollar is on the upside. It has been on the upside anyway since yesterday, extended above 100-hour moving average. So yeah, it has been stepping higher yesterday and today so far. So that pretty much opens the door to initially to 115.64 level, and later on the round 116 level. 116. Okay. So yeah, positive euro dollar intraday 30 minutes chart, but in the daily medium term, so daily and weekly, we are still in a down channel. The end of the down channel could be seen if and only if the asset managed to extend above the channel on the upside, obviously. Okay, so that was about euro dollar. If you have any questions about euro dollar, don't tell me in the question box. I'm gonna check them again. Now I'm jumping back to gold because many of you asked for it and we haven't finished it basically. So yeah, a lot of consolidation. Sorry. Sorry. This is what a lot of consolidation since the whole November. We have spotted that it's moving in a triangle in the 4-hour chart. So I put my lines on just to know where the ceiling and the floor is. Okay, so I'm gonna zoom into the 1-hour chart. We are in a pullback. Support is at 39.85. So relatively okay. I'm gonna put the 30-minute chart. So a bit skeptical. Really identical tails, but parabolics are well above the price, so it seems that we're gonna see some further decline. Anyway, the support is another 10 points lower, $10 lower. So let's wait and see. That's for gold, guys. Now, Bitcoin. Someone asked about Bitcoin, other than the position. So, Bitcoin. Welcome. I haven't forget dollar yen. Don't worry about it. It's not really strengthened, if you ask me, Alfred. It's more of a mix. So if I just focus on dollar index, this is dollar index. Okay, this is dollar index. You can see that the past 2 days is strengthens for sure since September. You're right on this since September, but I mean, so far yesterday and today was like it's in a pullback. It temporarily like spiked yesterday, but now it like reversed all the losses that we have seen, and it's back to 99.50 territory. So there is a lot of risk appetite that is basically adding some pressure to the dollar. Where is Finbis? So guys, by the way, let me check. I was thinking that the biggest gainer so far is Europe, and yeah, that's the case. Not like, yeah, the gainer of the day so far is Euro, and the biggest loser so far is Kiwi and Bitcoin as well. So let's turn back to Bitcoin. Bitcoin is very, very interesting. Very interesting. So, okay, I know that this might look a bit messy. Okay, I'm gonna get rid of some indicators just to make everything easier. Okay, just a second. Indicators. I don't need pivot points. I'm gonna keep moving averages and fractals. Okay, so look at that. Basically, we have a very, very strong support level for the past 5 months. So the asset returned back to the 5-month support at the 100 territory, 100,000 territory is also round number, a key psychological level. So basically, we wait and see, we want to see, and you need to closely monitor every single day Bitcoin, because if it breaks 100,000 barrier, then we could see further sell-off. Free fall basically could be a free fall, I'm afraid, because the next support levels are way, way, way lower. 91, 70. I mean, see? So, yeah, a break, an official break of 100,000 territory could end up with a free fall, a lot of selling for Bitcoin. So it has been negative on the downsides the whole September, the whole October, the whole October so far. And I'm gonna zoom into the 1-hour chart. We have seen a nice rounding top, okay, flirting again and again with the 100,000 territory, 99,000 territory. So that's a very, very, very important support zone, guys. If it breaks, it's all about another sell-off, okay, another sell-off. If something like that happens, I mean, in general, this will a move below it will find a lot of pending selling orders, but short pending orders. So that could lead to a massive dip, to a dive. Okay, so keep that in mind. Put some alerts. Okay, because everything points to a really bearish outlook for cryptos and more precisely for Bitcoin. Okay. Now, for our scalpers, for intraday traders, it is what it is. Look at that. This is a 30 minutes chart. Okay. It's been on the downside since early this morning. Okay, moving averages right now are a bit flat, but I mean that just looks limited. Let me use my other setup, the Heikenashi, just to see whether we are getting any other information other than what we have seen so far today. Yeah, look at that. It's been on the red bearish Heikenashi candles for how many sessions? For 13 sessions so far. Okay, obviously the last one is a bit doji, but it's not bullish. So we don't really see a rebound yet. In order to see rebound, you need to see a bullish candle like this one. You see? Like this one, right? A bullish candle. And we need to see the parabolic SAR turning below the price, but more precisely, more importantly, is to see a bullish Heikenashi with no tail at the bottom. That would be a confirmation for the end of the decline intraday. This is a 30-minute chart. It's for scalpers and intraday traders only. The overall outlook remains negative, okay? So a rebound, okay, will occurred, if and only if we see after a doji candle a bullish Heikenashi candles. So yeah, but in general, right now, negative outlook prevails for medium, short term, and intraday term time frame. Okay, so hopefully this was enough. Dollar yen. Dollar yen, dollar yen, dollar yen, dollar yen, dollar yen. Let's jump to dollar yen. It was really useful. It was really nice and interesting, actually, because especially after we've seen. Okay, I'm not gonna use Heikenashi in this one. I'm gonna get back to my wide intraday setup. So sorry for that. Just a second. Okay. Just a second, guys. Sorry for that. So that was the weekly support, immediate support. 152 was a very important level to be closely monitored, and it has broken. Okay. So 154 was reached already since last week. Okay, sorry, just a second, sorry. Okay, so actually we have a very important, I'm gonna put it over here. Yeah, so what I have put right now, what I have put in my analysis are 3 lines. 152 support level, 153 support level, round number, and 154.45, which is our resistance level, the latest highs that we have seen the whole November so far. So these are very important levels to watch, okay? Because they will give you an indication on what's coming. So the fact that we have the asset was unable and failed again and again and again to extend above 154.43 is like it's raising questions whether we're gonna see a pullback or not. For the time being, the asset has stuck between 153 and 154. So as long as we don't see a confirmed move below 153, then it means that the asset will stay within this zone, within 153, 154.45. But if we see tonight or on Monday morning an extension below 153, but remember, a close tonight below 153, or I mean, as we move closer to the US, this could open the doors to 152. So right now, this is the 1 hour chart, okay, just to give you an what's going on, where we are standing right now. Right now, we are hovering around 153. We have a bearish cross of the fast moving averages, but doji candles hovering around 153, flat RSI, flat stochastic, indicating that it's not easy to break 153 officially, to extend below it. Okay, actually, let me put 153 because it's currently is not 153. Okay, this is where a 153 is. Okay, only a confirm move, a close below 153 could open the doors to 152 level. But with a flat RSI, flat stochastic, really doji candle, this looks a bit unlikely today. Okay? A move on the upside could be seen only if you see dollar yen returning back to the pivot point, okay? 153.30. Okay? This could mean a retest of 153.50 level, or yeah, over here. Just a second, sorry. Sorry, I feel blind. 53. It's not a channel, it's more of a range. So I'm gonna find the mid of this range, the range that we have seen, the sideways, the ranging market that we have seen the last. Oops, come on. So where are we? So the mid is at 153.68. So that's the mid of the range. Okay, so yeah, a rebound could confirm a move up to 153.50 or up to 153.65, 68. So this zone, if and only if the asset extends above the 153.25 territory. Yeah, currently consolidating, failing to extend below 153. So that was about a dollar yen. Let me see the questions. Yeah, euro is bullish. It's quite bullish. And the reason is also the differentiation between the Fed and, oh, nice. Guys, nice. This is the 30 minutes in euro dollar. Sorry, I'm going to jump. I'm returning back to euro dollar because remember our analysis that we have done just a few minutes ago. It was in a range, right? It was in a range between 153.53, 153.65, 64, and it has just broken it. So it's what I told you. If it fails to extend below 115.53, that means that consolidation will continue before another attempt on the upside. So the fact that it was is extending gains, it means that it could come up to 115.95, around 116 zone, which also is the ceiling of our down channel. Okay, so we have a really, really, really strong euro dollar the past 4 hours. Yeah. So yeah, the breakout just happened like so. This candle will close in 15 minutes. So you know what? I'm gonna check also with High Kanashi because it's more sensitive and it's more applicable for the for short time frames. So sorry, excuse all these lines. I'm gonna get rid of them. So I have still euro dollar, but I'm trying uh, to clear all these objects. Okay, perfect. So 1 hour, sorry, 30 minutes chart. Nice. Keep posting. This is the Heikenashi 30 minutes chart. Keep posting positive, bullish, Heiken ashes. Parabolic SAR is bullish. Moving averages pointing further on the upside. MACD is positive. Stochastic make a quick correction, but now it's flat. So that means that it's not really turning lower. Most possibly more precise, is more likely to like just bullishly cross again the slow line and move above 80. So yeah. So what do you want me to analyze else about euro dollar raw? You keep asking about euro dollar, but it looks really straightforward to me, at least with my setup. So anything else that I can help you with? It is what it is, guys. Look this candles, the tails on the upside, higher and higher. We had this doji, was a bit of a consolidation overbought, which is normal, but it's still positive. It did another higher tail. And anyway, fundamentals, they quite support euro dollar. And I'm not referring to the fundamentals of dollar. I'm referring also to the fundamentals of euro. The fact that, sorry, the fact that we have different paths between the two central banks, so slightly different paths to be honest. So ECB, as you know, they haven't changed their rates in the last week, was it? Yeah. So they set the ECB interest rates on hold because of the weak labor demand, the really high savings and global challenges. However, and they said that they remain cautious, etc., without clarifying really whether they want to proceed with with further rate cuts this year. So they are more of a data dependent. While Fed, on the flip side, even though we have a lack of government data, we keep having Fed speeches um, looking a bit hawkish. So this is causing a lot of opposite signals for dollar, a lot of contradictory signals for dollar. But anyway, dollar is mainly negative today. Okay, Let me see the questions. No questions? No further questions? Let me see. Oh, dollar Swiss. Yeah, you're absolutely right. I forgot about we have done gold Addy. Okay. So, guys, from what I see in the gold over here, other than the triangle that it has stuck into the last few days, this is the 30 minutes chart. It looks that for the short term, the intraday basis, it's a bit steady. It seems that this decline might not continue. You see, consolidating higher lows, indicating that this short term down leg might run out of steam. You see stochastic flatten as well. So yeah. So I'm gonna go to dollar Swiss. USD Swiss for who asked about Euro Swiss? Someone asked about Euro Swiss, dollar Swiss. Sorry, Alfred again. Dollar Swiss. Let's see. That will be the last one that I'm gonna do. Anyway, the live will stay on our YouTube channel, so you can drag and drop your cursor and see the analysis again, or just jump into the asset that you are interested. Very nice call, Alfred. Very nice call. Actually, that was a nice evening formation over here. Clearly bearish. So anyone that saw this 3 hours ago, well done. Well done. That was a nice bearish. Okay, we have bearish moving averages. Keep pointing on the downside. MACD is negative. RSI is negative, it's keep extending lower. So it seems that there is a lot of selling pressure, and it seems that this selling pressure will continue. Yeah. Let me see. And it's not a random selling pressure. Wow, not 80, 50. So it seems that dollar Swiss continues in red since yesterday. But you need to be careful, because this latest breakout, so what I mean breakout, I'm referring to the fact that it extended just now, just the past 30 minutes, it extended below 1, 2, 3 days, sorry, 1, 2, 3, 4, 4 days low, not 0.8057 is the support that we had for the past 4 days, for the week. And it has broken it, and decisive broken it actually. That's a big candle extending below this 4 days support. So that opens the door to 0.80. So the 000 number, not 0.8, not. Well done, Alfred. I don't know whether you took that trade whether you saw the information earlier today. That's really nice. That's really, really nice, especially the breakout here. But anyone that saw that one over here, the evening formation, well done. I don't have anything to say, actually. Well done. Not necessarily. A very good question, Joshua. Usually, yes, there is a correlation between the US indices and dollar. However, that's not the case right now. And if I put the correlation metrics, I think I'm going to prove incorrect. I'm going to prove right. So if I put, let's say, US 100, add it, USA 30, Dow. Okay, let's put these two. And dollar index, where is dollar index? Dollar index, can you see? No, you can't. Why? Oops, oops, oops. Wait a minute. Bear with me. Wait. Can you see my screen right now, guys? So I have placed a correlation matrix to reply, in order to reply to Joshua. Usually, yes, theoretically, and there is a correlation between US dollar, a strong correlation between US dollar and dollar index. US dollar and US indices, so NASDAQ, Dow Jones 100, which usually, sorry. So, as I was saying, there is a positive correlation usually, but that's not really the case currently, or at least today. So this is the 1 hour chart correlation metric. So this is dollar, and if I scroll, and you see, so NASDAQ, I have NASDAQ. Can you see? I have NASDAQ in the second column and Dow in the third column. And the correlation between them is 50-50. So today there is no correlation. Anything that is less than 80, 75, 80 is the ideal, is not considered to be a correlation. So even, let me put the daily chart just to see. No, really weak. No, there is no correlation. No correlation at all. No correlation. The weekly, no. So because of all these special events, shutdown, something we don't see often. So especially the longest in record. A lot of geopolitics as well. Why not? Concerns around AI. Earnings season also is still on. I forgot the nuclear threats between Trump and Putin yesterday night. So we face a lot of uncertainties around the globe. So that's possibly why we don't have a correlation lately between or this year at least between US indices and dollar. In the history of financial markets, though, we tend to have a positive correlation. So it means that the rise of the dollar, US dollar, has a slightly positive correlation to the S&P 500. Okay, but this year, I believe it's the whole year. Can I use? So how many weeks do we have there? Yeah, actually I placed it. Yeah, there's no correlation this year, I'm afraid. Yeah. Oh, stuck. Sorry. I broke it. We open it again. Okay. So 200 bars in a weekly basis. That means 1 year has how many weeks, guys? 52. So 200 bars means 4 years. So in the long term, there is, let me check. No, there is no. It seems that after COVID, that is not a correlation. Let me put NASDAQ and S&P 500 as well. Sorry, let me put S&P 500 as well. It will be interesting to see. USA 500 added. Added. I need to. Okay, I have too many. I need to get rid of one. Where's my USA 500? Save. Here we go. Yeah, there's no correlation. No. Yeah. But there's a really strong correlation between gold and stocks this year, not stock US indices. Okay. So that's a useful metrics. You should use it. We offer it for free anyway, but you need to download the premium traders tools from our website, okay? So yeah. Guys, if you dollar Swiss, I haven't forget dollar Swiss. Actually, yeah, we done dollar Swiss as well. So the next major support level is at the round 000 number, not 80 territory. Okay. Now, an immediate one for anyone that is scalping, intraday trader, etc. Then use, guys. Actually, it's an up leg. So let's add. I'm gonna add firstly a Fibonacci from the latest up leg over here. So we have, it has already broken, retesting actually right now, the 38% Fibonacci level. That's the 1 hour chart dollar Swiss. We are in the 1 hour chart dollar Swiss. So retesting, flirting with 0.8047, the 38.2 Fibonacci level. The next support could be seen at 50%, which is at 0.8025. Now, for anyone that is an intraday trader, they have a 15 minutes chart, 5 minutes chart, 30 minutes chart, etc., that you can use alternatively. Let me see whether the Fibonacci extension is of any use. Sorry. Yeah, nah, broken it. Yeah, these are the ones. And let me see. So it has already, okay, from the latest up leg we have. And okay, next support, what, not 80.40. It's still not 0.8025. Yeah, moving average is pointing lower, MACD is negative, RSI is negative. So there is rising negative momentum. Guys, I'm gonna call it a date. Anyone that just asked about gold, I have done it already. So feel free to drag and drop your cursor to the live streaming will stay in our YouTube channel. So feel free to drag and drop it and find gold since you join quite late. Ernesto asked about pound. I have done an analysis about pound in my article yesterday. Please, please, please check it, Ernesto, because we have a very nice M formation in the long term, at least. But this M formation in the long term could be proven really, really useful. Where's my... Come on. So where is cable? Cable. Here we are. So yeah, can you see that? Or am I the only one that I can see this M formation? Doesn't it look like an M? Which is a really strong bearish formation. The asset already broke below it this week, and it will be key in the next in the upcoming days and weeks to see whether we'll fail to get to return above it and whether we're going to have a confirmation, because something like that in a daily chart could literally mean a deep dive back to 120 territory, but it's too early to tell. But you need to put it on your monitor list, okay? So intraday now is trying to recover some of the losses that we have seen so far this week, but is struggling to extend above 131.40 level. Is struggling. Sorry. So yeah, we need further confirmation. It doesn't seem this rally looks limited. Okay, there is not enough momentum to push pound higher. Okay, so it needs to extend above this level. It needs to extend above 131.50 in order to open the doors further on the upside. And this looks unlikely. There is not enough momentum. This rebound looks like it's run out of steam. Guys, I'm gonna call it a day. Thank you very much for watching. Hopefully our session helped you. If not, the feedback is more than appreciated. So yeah, have a great day ahead. Take care. See you again next week. Thank you. Bye-bye.